Hello everyone, I'm Stephen Gage, President of Vision Commercial Development. Today we're diving into the potential impacts of the 2024 presidential election on financial markets and investments following President Donald Trump's recent victory. Trump's policies could have significant implications across various sectors, from taxes and trade to energy, healthcare, and even cryptocurrency. If you're curious about how this might affect the economy and your investments, let's break it down. Starting with taxes, Trump's win means that we're likely to see a continuation and expansion of the tax cuts he introduced during his previous administration. He has plans to extend the Tax Cuts and Jobs Act provision, including lowering corporate tax rates for domestic production and possibly making individual tax cuts permanent. These changes could boost certain sectors, particularly those focused on domestic production, like healthcare services, real estate, and utilities. Lower corporate taxes could lead to higher after-tax profits, making stocks in these sectors more attractive to investors and potentially lifting share prices. However, while these cuts may provide a short-term boost, large tax reductions could create concerns over fiscal balance, potentially impacting long-term markets' confidence if investors worry about economic stability. Trump's approach to trade, particularly his stance on tariffs, could also have noticeable effects. He's promised aggressive tariffs with proposals of up to 60% on Chinese imports and up to 20% on other goods. These tariffs might benefit U.S.-based manufacturers by reducing competition from foreign imports, potentially supporting domestic industries and their stock performance. On the other hand, tariffs could raise costs for companies that rely on imported materials, which may impact their profit margins. Higher costs could also mean higher prices for consumers, which could affect sectors dependent on consumer spending. Additionally, aggressive tariffs could lead to retaliation from other countries, disrupting global trade and introducing more market volatility. Trump's policies are expected to support traditional energy sources, such as oil and gas. By easing drilling requirements and regulations, his administration may encourage growth in these sectors. While this could benefit fossil fuel companies and potentially increase stock prices in the energy sector, increased supply might also weigh on energy prices, depending on the market demand. This focus on traditional energy may also divert some investments away from renewables. In the technology and finance sectors, Trump's focus on reducing regulatory burdens could support growth and expansion. A more relaxed regulatory environment may allow these sectors to innovate and grow more freely, possibly leading to higher profitability and increased stock prices. Investors in tech and finance could see potential benefits from this approach. In healthcare, Trump has indicated plans to address costs within the sector, especially in relation to large drug companies and insurance providers. Changes in regulation or competition rules could impact healthcare stocks. Investors in this sector should monitor any developments closely, as they could lead to shifts in company valuations depending on the specific policies that he enacts. With Trump's election win, the cryptocurrency market could experience significant impacts as well, especially considering his campaign's pro-crypto stance. Trump has expressed support for making the United States a, quote, crypto capital, proposing measures like a strategic reserve of Bitcoin and the creation of a Bitcoin and Crypto Presidential Advisory Council to help shape crypto policies. Trump's proposed advisory council on cryptocurrency may help inform the administration's approach to crypto-related regulation and legislation, potentially leading to new tax incentives or clearer definitions for digital assets. This could increase institutional interest in the crypto market, as regulatory clarity is often a key factor for larger investors considering entry into the space. While there's optimism in the crypto community following Trump's win, it's worth noting that any significant regulatory changes will likely take time and may face challenges. As with any emerging market, crypto remains highly volatile, so investors should consider the potential for both opportunities and risks in this evolving landscape. With Trump's win, we can expect some market volatility as investors respond to his policies. While short-term fluctuations are typical around election outcomes, experts advise that broader economic cycles tend to play a more substantial role in long-term market performance than election results alone. Past experience shows that market uncertainty, especially around potential policy changes, can lead to short-term fluctuations. Investors are encouraged to maintain a focus on long-term strategies rather than reacting to short-term political developments. So what does this all mean for your investments? Experts generally recommend against making major changes to your portfolio solely based on election outcomes. Instead, it's best to stay focused on your long-term goals and investment strategies. Remember that elections are just one of many factors influencing the market, along with interest rates, economic conditions, and geopolitical events. Maintaining a diversified portfolio aligned with your financial goals can help you weather any short-term impacts and keep your investments on track. In summary, Donald Trump's victory in the 2024 election could bring about changes to various sectors, particularly around taxes, trade, energy, and cryptocurrency. While these policies may have an impact on specific industries, it's essential to consider the bigger economic picture. Experts encourage investors to stay focused on long-term strategies and avoid reacting to short-term political shifts. Thank you all for watching. If you found this information helpful, don't forget to like and subscribe for more insights on the financial markets and investing. Let us know in the comments how you think the election results might impact the economy. Thanks again, and we'll see you next time.